Hey, darlings, welcome back to Wall Street Wednesdays, where you learn how to make your money really work and grow one Wednesday at a time. Quick reminder, I am not a financial advisor, and this is not financial advice. Anything on this channel is not financial advice. This is for education and educational and entertainment purposes only. What you do with your money, darling, is your decision, okay? Okay, so let's talk about this week. Woo, what a crazy week, right? So if you opened up your app and you saw you looking at your brokerage account and your stocks and it's 20% down and you see the sea of red, most people panic. But you know why I don't panic? Because my first question is, what's happening? Why is it down, right? Because there's so many reasons that the stock could be down. But the question I ask myself is, did the business change or did investor sentiment change? Because those are two totally different things, right? If this is a temporary setback, then why should I worry, right? But I have to ask myself, well, did the company fundamentally change? Is it different than it was a month ago? If the answer is the company is still a great company and it's just that people are scared or people changed, I'm not really looking at a loss, right? And what I might be looking at is a great sale. So, and it's not because I know the bottom, because guess what? Nobody knows the bottom, okay? So the reason is because my conviction in that company is still intact, right? And if the business hasn't changed and it's just the price that changed, but what I own didn't change, why would I be scared? Because that's what happens. Don't let nobody scare you out of your position. That's very important. See, this is how I stay calm enough to think things through clearly, right? I run two separate accounts. I have one for my long-term investments, and then I have one for trading because I love the sport of trading, right? I love it. So I have two different goals for each account, and I have two different set of rules for each account. And I also have two different expectations for each account. So let me make that real for you, right? Let me try to break this down as simple as I can using Microsoft as my example. It's a company I love. It's a company I believe in. It's a phenomenal company and it's a moat. And I absolutely believe in Microsoft over the next 10 years, right? So that's my investment. I have a bucket for my investments. It goes in a long-term account, it gets planted and it grows. But I also trade around Microsoft, right? So if I see the earnings are coming up and I see a short-term opportunity or I can bust a move with an option, I will do that. I will take that as well. And that's a trade. Those are two different, completely different decisions. Long-term investment and a trade. Two different things. It's the same company, but I'm playing two different games with that same company. Okay? So with my long-term investment, I let it grow. With my trade, I'll trade it. And darling, this matters because guess what? Guess what happens in your mind if you don't separate them, right? You can panic. You could potentially sell your 10-year investment over a dip because you got scared. And then let's say you're trading and you move your stop loss, right? Because you couldn't admit that your trade went wrong. So you have to stick with your rules. You have to follow your rules. You have to have a plan. Sometimes people refuse to sell a losing stock because it has to come back. And yeah, okay, that could be your philosophy. But what happens when your investments and your trades live in the same bucket? You'll get confused. You'll make bad decisions. You have to have a plan and stick to your plan. Stick to your rules. Don't get emotional. Make sure you have two separate buckets, right? So you stay disciplined. Make sure you have a set of rules so you can stay disciplined. Because every dollar has to know its job. It needs to know what it's doing. And you need to know what you're doing. And that's why you have to stick to your plan and you have to stay disciplined. Okay, my darlings? So let's talk about the word of the week, which is volatility. And that simply means just how much and how fast that price is moving. It doesn't have to mean danger. It's not danger. It's a movement, okay? And for a prepared investment, for a prepared investor, movement creates opportunity. I want you to remember that, okay, darlings? Remember, movement can create opportunity. And darlings, here's our dollar move. This week, make a wish list. Write it down. Think about 3 companies you genuinely would love to own, right? So the next time the market panics, you're not going to panic. You're going to have a plan. You're going to stick to it. And instead of panicking, you're going to be shopping and not scrolling in fear. So here's the bottom lines, darling. Red on the screen isn't automatically a reason to panic, okay? Look at the fear index, right? Sometimes when the fear index is up, that's exactly when I want to shop. Why? Ask yourself why. And remember, you don't have to be rich to start investing. You just have to start. If you like this video, please like and subscribe and share this out with someone who's interested in investing too. I'll see you next Wednesday. Bye, guys.